Hello, hello, hello. Welcome to Sunday, April 26th, 8 p.m. Eastern. My name is Amanda with Grandma's Wealth Wisdom, and I'm putting it out there. Question of the day: is fire dead? If you're catching the replay, chances are you know what fire is, and that's what brought you to this video. But just in case, FIRE stands for Financial Independence, Retire Early, and it's a whole movement. And today I'm going to talk about if the coronavirus killed the FIRE movement in the metaphorical sense, of course. And that's what we're going to talk about. While kind of waiting for people to join live here, I'll give you a quick snapshot of what we're going to share. I'm going to talk both about the people who I think some of the people who have fired have reached financial independence, maybe retired early, who might be looking to get hired again and why. Also, the people who I believe the way they went about pursuing financial independence, retire early, I think they might be the safest right now, maybe even compared to other people. And then I'll talk about a little of my own story of my own journey toward financial independence. It's been not necessarily a straightforward one, so I look forward to sharing a little bit of that background as well. And then some steps you might take if you're pursuing a financial independence, no matter your current age or if you want to live extravagantly or frugally or whatever. We'll talk about what financial independence could look like. But first, the quote of the day. This is thanks to our friends at the Podcast Factory. I was scrolling through my Instagram today and came across this one, and I was like, this is perfect. They copied this from Les Brown. Too many of us are not living our dreams because we are living our fears. That's such a powerful quote there. Too many of us are not living our dreams because we are living our fears. Thanks so much to the Podcast Factory and your Instagram. Love that quote. And the part of the reason I chose this for this question, is FIRE dead, is because I've actually, there's a bunch of videos out there about the FIRE movement and pros and cons and, different things. And I've watched a couple of them. Can't say I've watched them all. That'd be impossible because there's always new ones coming out, right? But the main thing that I've been seeing that these commentators, whether they're yay FIRE or nay FIRE or whatever, what they've been forgetting about, I think, is this book. I should put on the side, Your Money or Your Life, which is kind of the Bible of FIRE. I hear them talking about Mr. Money Mustache and the Boggleheads and that kind of thing, and about the different indexed funds they might be using, stuff like that. But no one's talking about this book. And if you're at all thinking about financial independence, whether early retirement is in that for you or not, this book is a really great book, except for I disagree with the final bit of it. So it talks about, I'm going to the table of contents here, a 9-step program. I forgot if it was 8 or 9. And basically, I agree with steps 1 through 8 for the most part, but 9 is where I disagree with them. But the thing about a 9-step program is that you do it in order. And this, I think, is one of the most important things about financial independence, is what happens in step 1, making peace with the past. Whoa. Right? Step 2, being in the present and tracking your life energy. Step 3, a monthly tabulation. Step 4, 3 questions that will transform your life. Step 5, making life energy visible. Step 6, valuing your life energy, minimizing spending. Step 7, valuing your life energy, maximizing income. Ding, ding, ding. Love that one. Step 8, capital and the crossover point. And they talk about all of those steps before they finally get to step 9, where should you put your money? And I think that is super, super, super important. all of these videos that I've been seeing have been talking about, should you invest here? Should I have done this? Should I embrace minimalism? Is it too late for me to retire early? Stuff like that. But they're not going to, how do you think about who you are, what your life energy is, and how you're exchanging that life energy for something else? So keep that in mind when I get to who I think is the safest among the FIRE movement right now. I'm going to bring that up again because I think it's super important. But first, let me tell you a little bit about my own journey so you get where I'm coming from with this. So I left, like it says in the description, I left my cubicle shortly before my 25th birthday. I walked away from my 9 to 5 in pursuit of exchanging what I thought I wanted to do in the world, that thing that I would call my destiny or my calling. I wanted to pursue that without any concern about money, right? And so I figured out how to do that. Yes, I worked a couple odd jobs and different things like babysitting, and turns out that coffee was part of my calling. So I worked as a barista for a while to learn the trade, kind of whatever I had to do to make sure that ends were meeting during that time. And I'm going to be turning 36 this year, just put it out there. So it's been a decade of pursuing what is my life versus just what is my money, and making sure that my money follows my life. And I've learned so much, particularly about making sure that I'm not just cutting my expenses and living as frugally as I can, but I'm also thinking about maximizing my income and making sure I'm earning what I'm really worth. And there's been some really great people who have spoken to my life in those ways, and helped encourage me to not think of money as an evil thing or becoming rich as an evil thing, but a way to actually fuel more of my passion. And that's actually kind of where I come from. I don't come from, having a 6-figure job before I left my cubicle or having a rich uncle or anything like that. I actually grew up, when I was born, my parents were in poverty. They were on public assistance, and my mom went back to college about my age that I am now to be able to get a job that would help the family enough. So I was determined not to be in poverty anymore, but I also didn't want to just pursue money for money's sake, right? And so I chose, in some ways, an early retirement, so to speak, from the grind, from the 9 to 5, to pursue a passion and a calling that was really what my life was. And that's, when you think about your life or your money, if someone held a gun to your, and said, give me your wallet, you give them your wallet, right? Your life is not more valuable than your money. But also, like, that's probably the part of FIRE that I jive with the most. And I'm not as concerned about having 25 times my annual expenses saved, or invested. I'm not as concerned about, potentially building passive income. Sure, maybe I can do those things and that will help me pursue my passion. But also, I come from an entrepreneurial kind of mindset where it's about pursuing my passion and creating value in the world, and then people should pay me for that value that I've created. And I think if you really dig into this book, they allow space for that. Because I know there's people that love their jobs, people that would hate, are hating quarantine right now because we don't want to stay home and just watch TV and Netflix all day, right? We want to be producing something and be out there in the world. And that's where I come from too. And really, financial dependence for me is about being able to pursue that passion without any concern for how am I going to pay my bills. Thank you, Mohammed. That's a great encouragement that you just shared. I agree with you. I do got this. I'm really excited to continue to share what I've learned with people and continue to, impact the charities and the causes I like most because of the income that I make. And I would rather be giving that away than stashing it up for, having that 25 times my income. So with that said, I'll jump into who I think is doing the best right now. And I've got to share a picture with you. Actually, I'm going to be sharing a couple pictures. But first I want to share this spreadsheet, and hopefully it's big enough. I can zoom in. So this is the real S&P 500 with dividends, and the return that it's had since the year 2000 all the way to 2019. Let me zoom in a little bit here. So real returns, it's averaged 7.68 from 2000 to 2019. And let's say you had $1.5 million saved or invested, in this case, in an index fund that was following the S&P 500 in the year 2000, and you fired at that point. You started taking out your $60,000, which is 4% of that starting balance, and you just kept taking that out. At the beginning of 2020, at the end of 2019, you would have seen 1.3 million in your index fund after 19, 20 years of being financially independent. That might seem okay, might not seem too bad, but I wonder what people are seeing right now, right? After we've seen the decline that we've seen in the last couple of months, well, particularly in March, and even though we had that recovery in April, they're probably not seeing 1.3 million right now if they were to look at that, particularly even in an index fund. And of course, and this is with dividends too, all factored in. So you'd have to have an index fund that also gives you dividends, which, yeah, just to point that out. So I would think, well, so most people go into FIRE if they have this 1.5 million and they think they can take out 4% and that it'll always stay at 5 million because 1.5 million because the stock is growing by at least 4%. I mean, it did an average of 7.68% here. How can that be that it's now down to 1.3? Should I start taking out less than 60,000? Great question. That's why I think if this was all you had and you had chosen to be financially independent, retire early, and you were living off this 60,000 a year from this index fund, you'd be pretty scared right now. And you might start looking for a job or a way to figure out different income. Because really, oh, sorry, I just probably guess Brandon's here and he says I need to zoom in. So of course you can always make your screen bigger to see this. 1.5, you're taking out 60, which is 4%, and then 1.3 left here at the end. Okay, I'm going to stop sharing that actually and share something that's a little easier to see. And it's really like a summary of how a lot of FIRE people are building their FIRE fund. They're building it like this, where they have the money that they have in the index funds or the ETFs or wherever they have them is this money at risk that they may or may not be okay with losing, right? If they lost it all, they'd have, or if half of it, they'd probably have to go find a job. And they have very little in safe and liquid cash reserves, or as some people call it, their cash, CACHE. That's their emergency fund. And if you think of that as a pyramid, it's teeter-tottering, and something like COVID-19 could totally make it fall over. And then the people who fired would be hired again. And I think that is the people who are following FIRE and are choosing financial independence, choosing FI, if they've set up their financial life this way, then they're probably really scared right now. Hopefully they're not in this way. Hopefully they've done something different, which is what I want to talk about now, the people that I think are safest in the FIRE movement. And there's two ways to think about this. The first one, I'm going to share another picture. Let me go to that picture here. There we go. So if they've set up their financial life like this, where they've got this safe and liquid cash reserves, enough of their emergency fund, and for opportunities equal to at least 2 years of household income, if not more. And then relatively safe and liquid capital for medium-term needs. And then finally, on top of that, the money you can afford to lose. And you notice I went from the bottom to the top there. The order is really important. This is a side note for people that are starting to choose to pursue financial independence. You want to start from everything that I've seen in terms of success here. You start with the purple, the safe and liquid cash reserves. And once you've got that filled, then you can go to the relatively safe, you can take on some more risk. And then finally, you can go to the riskiest part, the money you can afford to lose. And in my book, that's the stock market or the casino, same difference, right? So that, I think if someone set up their financial life like this and they've got plenty of safe and liquid cash reserves, then right now, those safe and liquid cash reserves are acting like what we call a volatility buffer. It means when the market goes down, they don't have to sell in order to, pay for the gas in their RV as they go across the country or buy the rice and beans that they're eating or, I'm kind of making light of it, but it's serious, right? They can actually go to that safe and liquid cash reserve and use that temporarily until the stock market recovers. And why does it say 2 years of household income? Well, if we look back, when I was showing those S&P 500 with dividend numbers, we had, the dot-com crash, 2000, 2001, and 2003 were all down years. With the Great Recession, 2008 was a down year. And then we saw a recovery in 2009, but it didn't happen automatically. It was more of an 18-month, if you zoom in and look at not just the year-end numbers, but the numbers in the middle there. And so if you have 2 years, you're getting closer to being able, no matter what kind of illness the stock market gets, you've got those cash reserves that you can use in the meantime. And then when the market goes back up, that's when you can sell and maybe restock your cash reserves as well at the same time. So again, the technical term for that is volatility buffer. If you want to Google that, it's a great thing. I forgot I had another image to really encapsulate what this looks like. It's from a webinar that my friend Mark and I did this past Saturday, just yesterday, feels like a long time ago, Brandon, if you would share the YouTube link to that in the show notes, that'd be awesome. Or not the show notes, the comments, that'd be awesome. But I want you to look at this really closely. So this is the S&P 500 again, and this goes all the way back to 1965. And what most people would do as they're calculating their FI and what their freedom number is and stuff like that, is they would look at, this average return of 7%. It's based on this dark, full black line. It was 7% from 1965 to about 2015 right here. And then they project that it's going to do something like this going forward, but still stay at that 7% average return. And so this reddish, orangish reddish J curve right here is what they expect to happen with their investments going forward. And then they can calculate how much they can take out of it based on that. But what would really happen if we have the same kind of volatility we've had since 1965 is that this blue is actually what's more likely to happen with volatility factored in. And you'll see there's a big difference between the red and the blue here. That difference is the difference of volatility and why a volatility buffer is so, so important. We've got another slide. I'm just going to go through them really quick to get to this other slide. This is not the exact thing because this person is taking out more than 4% of their IRA. But you can see if they are taking it out in the down years, their IRA actually gets cut from 2 million down to 941 million. And then on this side, if they're taking out money from somewhere else, instead of from here, they're able to actually take that 2 million and make it 3.7 million. That's really the power of a volatility buffer. Um, so those that have a volatility buffer are the FIRE movement I think are safest right now. Thanks, Brandon, for sharing that in the comments. And I said there was two options. The other option is the people in the FIRE movement that have set up a business or some sort of passive income that they're not just relying on a big pile of money that they've saved up. So maybe they did real estate, or they did get stocks that have dividends that are still paying dividends, and that has some passive income for them, or they chose to build a business, right? Like kind of what I did, right? Pursue entrepreneurship as a way to fulfill my passion, create value in the world. I don't have a big pile of money, but I'm still living off of the income I'm able to generate by providing value for other people. And then I get to create even more value without having to worry about getting paid for it, like I'm doing right now. This is considered my downtime, but I thought it was really important to provide some extra value. That's my choice, how I want to extend my life energy during this time. So, to recap, if you haven't checked out this book, check it out. Steps 1 through 8, really great. Step 9, I think you need to get a second opinion on. I'm happy to give you my opinion if you'd like. And then, and of course, go in order, right? Get an idea. What is my life energy? What does quote unquote retirement mean for me? It might not mean traveling around in an RV and eating rice and beans and stopping working. It might mean pursuing this passion or finding a way to make money doing X, Y, or Z rather than what you're doing now. Or it could mean doing what you do now, but on a part-time basis, or without so much stress and anxiety or something like that. Of course, there could be some people that financial independence or quote unquote retirement for them means that one spouse gets to stay home with the kids while they're young. I think that's a great definition of what financial independence could mean. You need the moral of the story is you have to figure that out first. And then the second thing is, as you pursue financial independence and you're building your financial pyramid, right, your financial life, make sure you're building the safe and liquid and enough of that. That pyramid had 2 years. That I know that's more than what most people would say, but I think that if you want a true volatility buffer, that's it. And then from there, go into the medium risk and then the most risky elements rather than jumping straight into the most risky. Of course, there are always exceptions to this. I don't mean to be giving personal financial advice during these videos. You should talk to someone who knows your specific situation and is trained and able to give you unique personal advice. I'm happy to help you think through things, help you think through the questions I ask of myself and of others all the time. Actually, that question, what does quote unquote retirement mean for you, is one that I ask on an almost daily basis. And I love talking with people and helping them figure out, like, are we building to a time where you just get to travel and do whatever you want? Are we building to a time when you get to say, I quit to your job because you've got this side hustle that you're now able to make your full-time hustle? Or maybe retired means that you hand off the management of your company to someone else, but you still keep all the control. You're just not in the day-to-day. I love when that's someone's definition of retirement, because I love to work with entrepreneurs and business owners and help them get to that point. Another, retirement could mean you've got a funnel that's passively creating income for you that you just have to tweak and improve a little bit here and there, but you can work, do the 4-hour work week or something like that while that passive income comes in. That could totally be a thing too. So yeah, go in order with the steps. Don't just jump into stockpiling a big pile of money without figuring out what you want it for first. That'll also help you with the motivation factor to keep going when it does get hard. And when you're like, do I really have to make this sacrifice for this really awesome thing that I want. You're going to know how really awesome that thing is that you want, because there's going to be so many times when you will want to give up. At least I did. And it was really having that clear sense of calling and purpose or destiny or whatever you want to call it that kept me going. And it's keeping me going still today. So yeah, is fire dead? I'll put that question back up. I think, well, so we do, I'm going to just summarize here. What I'm trying to say is, if the fire movement continues to be a movement that is just talking about in what index funds to use, or what kind of stocks with dividends, and how to get more and more frugal and that kind of thing, I think that in the world that we live in, from where we had .com, Great Recession, now whatever they're going to call what happens during COVID and after, and then the next one and the next one and the next one. We don't live in the Dave Ramsey era of 1980, 1990, when the stock market was going crazy and had very little downturns, right? We live in a new era, and we need to embrace that era and what that means in terms of having volatility buffers and having a nice low risk portfolio. And it doesn't have to be just treasuries and bonds. There's actually some really great alternatives out there that I don't see being talked about anywhere in the fire movement. And I think if the fire movement's not willing to embrace some alternatives, to start questioning some of the slogans that were invented in the 80s and 90s to make some boomers rich, and if we're not willing to get back to the greatest generation and some of their time-tested principles and how they would have made sure they had liquid cash reserves, most often way more than 2 years of income covered, right? Then I think we're going to miss out on how we can help our generation as we're in the prime of our lives, right? 30s, 40s, 50s, over the next couple decades. We're going to miss out on how we can help each other the most. But if we're willing to reconsider some of the axioms that are really just people believe them because they've heard them so much, and I'm afraid to even repeat them because people keep hearing them and they believe them so much. If we're not willing to question those and get back to the things that worked in the 1930s, right? When the market was super down, and it was down for 25 years, right? From 1929 to 1954, when it finally got back to the pre Great Depression levels. We're not willing to embrace what people were doing then for our generation when we're experiencing these dips over and over again in our market. I know we've had a short recovery this past month. Who knows what's going to happen from here forward? But we need to think through, what do we really believe is going to happen, and can it always go up, and stuff like that. So I think for the fire movement to stay alive and to really, really help our generation, right? We need to be thinking about those kind of things and being willing to question, say, okay, boomer, for what really are their financial truisms that aren't really true anymore. And if you love doing that, if you want to question the conventional and get back to the time-tested wisdom, please subscribe to our page, like our channel, watch our other videos. We're talking all about that with Grandma's Wealth Wisdom. I do have to say, a really big thing for me when my actual introduction into the financial gurus and who I followed for a long time was Susie Orman. And I like a lot of what she says. There's a lot of what she promotes that I totally disagree with. But one of her big things is people first. And that way of thinking about things, about who are the other people, that we're choosing right now to stay home instead of going out to make a whole bunch of money, right? We're willing to put other people first. I think that says a lot about what financial independence means, where we're able and willing and going to make happen come hell or high water, putting other people first, and putting ourselves first, right? People first. And then things, right? Which minimalism, what, like you don't have to have a lot of stuff. And then money, right? And you figure out what that path to wealth looks like for you and continue to go from there. I didn't know I was going to bring up Susie in this video, but yeah, I'm actually thinking one of these days we might talk about. Actually, did I write? No, it's going to be a future podcast episode in our podcast. I put it down as an idea to talk about how Grandma Ramsey and Susie are different, because remember, Susie and Dave are both part of the Boomer generation. But Grandma wasn't. She was part of the greatest generation and has some things that she disagrees with the Boomers about. And I didn't mean to make this a whole generation thing. I know there's some really great Boomers out there. And they've actually taught me some really cool stuff. So want to make sure I throw that in there as well. Cool. We're really excited to keep this conversation going. Please reach out to us. We'd love to talk, share with you more about how we disagree with step 9. If you want to hear that, please go to Grandma's Wealth Wisdom, click request a meeting and chat with us. Subscribe, like this page wherever you're looking at this, and we'll talk with you soon, I hope. In the meantime, keep building toward a smart, stable financial future using the time-tested wisdom of our grandparents' generation. Talk to you soon. Peace.